evening and welcome everybody to my webinar. The topic of my webinar tonight is technical analysis versus fundamental analysis. For those of you who have been trading for a while, I guess most of you will probably be familiar with using some form of technical analysis tools, right? And I will spend some time tonight talking about some of the tools that are very useful in trading. For example, the fast moving markets, and I will also be sharing with you what are my favorite tools in technical analysis. The other very important part is, of course, fundamental analysis. Fundamental analysis is seldom used by most traders, but for institutional traders, for hedge fund traders, fundamental analysis is extremely important. In fact, most of the institutional traders, they use more fundamental analysis than technical analysis. Okay, so I'll be again sharing with you some of the methods that you can apply in fundamental analysis. Okay, and we're going to have a pretty diverse subject tonight. I'll also be talking about the other aspect, which is the behavior analysis as well. Okay, so to make the whole discussion complete, I'll be talking about technical analysis, fundamental analysis, and equally more important, behavior analysis. Okay, Thomas have given you an idea of my background, but I just want to quickly go through, just in case Thomas has not mentioned some of my areas. I'm basically an economist by training. I've been trading in the stock markets, futures markets, commodities, and foreign exchange for over 20 years. So I can say that I have some experience in trading. When I was a graduate, I actually worked in a bank for over 25 years. So I was involved in many areas of the financial institutions, working with many big organizations. And at the same time, I also like to do a lot of lecturing in finance, banking, and investment area. The reason why I wrote a couple of books is because when I deliver my seminars or workshop, I like to use a material that is used in the seminar or the workshop. So I normally, develop those material that I think it's more relevant, and some of the material that I developed over the years, I put them in the book. So some of the better known ones will be the 8 candlesticks, trading naked, and price driven trading. So these are actually books that I wrote, I written over the years. But the point I want to make tonight is that I'll be talking to you from my experience as a private trader. Now, the difference between a private trader and an institutional trader is that a private trader use their own funds, whereas the institutional traders use funds that is given to them, use fund that is subscribed by the investor or the clients. The term that we use is other people's money. So private trader use my own money, institutional trader use other people's money, or sometimes we call it OPM. So I'll be talking to you as a private trader from a point of view of, trading with my own money. As I mentioned, trading naked is probably the the book that most traders would like to learn, because that is a book that I teach on price action trading. And of course, the very basic, the kindergarten level of trading is the 8 candlesticks. So the 8 candlestick is really the kindergarten of trading. So everybody must know about the 8 candlestick, okay, before they advance into the next level, uh, either in terms of trading, technical trading, or discretionary trading. And of course, the more advanced will be the high probability price driven trading. So this is a much more advanced level of trading. Uh, some of the people might not want to go to this level because we're talking about very advanced things like Elliott wave trading, talking about harmonic trading and all that. Okay. So let me just spend 1 minute talking about the disclaimer. So this webinar is purely for educational purpose. Huh? Right. So I want to stress it's for educational purpose. And I normally do not recommend any stocks or any particular instruments, specific instruments. Right. For example, don't ask me about whether you can trade Tesla, or you can trade Apple shares. I won't be telling you that because this is purely educational webinar. The whole idea is you learn about what I know about the markets and trading. But if you really need, for example, investing advice, please go and talk to your broker or your licensed investment advisor, because they are by law legalized to give you the advice. I'm not, okay? The risk of trading, of course, is very, very substantial. And obviously, if you're trading for long enough, you should realize that risk management is very important in trading or investing. And if you're trading the financial markets, always remember that you should not exceed your losses, because if you exceed your losses, there is a potential of margin call, right? Okay, so always try to maintain, okay, your equity within your means. So on that note, let me go through the agenda tonight. As I said, the agenda tonight is really to explain, okay, what is this thing called technical analysis, okay? Okay, technical analysis, or some people like to call it, you know, TA, okay? So TA is a short form for technical analysis. So I'll be explaining what is TA, and obviously TA is a widely used terms in the financial markets. But the problem is that everybody use TA in a different meaning. For example, if you talk to people who are trading the stock market, so they probably talk about TA in the stock market. And when you talk about people trading in the futures market, they're saying, okay, TA is used in the futures market, and they could be slightly different in terms of the way that TA is being used. Okay, right. And obviously, I'll be talking more about the fundamental analysis, which is the FA. Okay, so TA and FA will be the main area that I'm going to talk about tonight. And then I'll be going to talk more about the tools and tactics that are used in trading. Now, obviously, there are many tools and tactics, and the tools and tactics from one trader could vary for the next trader. The reason is because everybody has to select the tools and tactics that he or she is familiar, or you should use the tactics and tools as relevant to the market you are trading. Okay, so that is the discretion that you have to decide what are the tools and tactics that is best suited to you. And then as I say, I'll be sharing on how I use TA and FA in trading, which I think is more important because the whole idea of attending tonight webinar is really to understand how I use the TA and FA. As I said, uh, most of my discussion tonight can be found in my Trading Naked book, which is obviously the book that most traders are familiar, because this is a book that talks about the methodology that I use in trading. So let me start by telling you about the big picture of trading. Okay, uh, the big picture about trading is actually about the three things I talk about. Okay, I call it the three pillars of trading. Okay, the three pillars of trading are universal. So whether you trade the stock markets, or you trade the futures market or the foreign exchange markets, the three pillars will always apply. Okay, and this is so very important in trading that you have to understand trading involves the three pillars. And what are the three pillars? Okay, number one, I call it the trader psychology. Yeah. Okay. So in other words, the trader psychology is so important. Okay. Uh, it is so important that it is always what I call irrelevant to some people, because psychology is something that very few people want to talk about, but it's extremely important in trading. Okay, right. And as the saying goes, uh, 80% of trading is about psychology. I emphasize psychology so much that to me, the failure of trading for many people is because they don't understand their own psychology, which I would explain a bit in tonight's webinar. And in other webinar, I really explain a lot about the psychology, that why most people fail in trading or why people make losses, because they can master the the other aspect of trading, but they forgot about their own psychology. Okay, and your own psychology got to do with your personality. It's got to do with what we call the biasness that everybody has. The second pillar is, of course, risk management. Okay, now you can be very good in trading. In other words, you can have a good strategy or a good system, but because you fail to control your risks, as a result, you will still find yourself at the losing end, at the week, at the end of the month, or at the year. Okay, why? Because risk management is a second important pillar in trading. Okay, in fact, it's so important that I emphasize a lot about you should be managing your risk at the same time while having understanding of your mind. And of course, the final part that that we are going to talk about today is having your own trading system. Okay, you can develop your own trading system, or most of the time people would use or modify the system that they know and try to adapt to themselves. Okay, so tonight we're spending almost the whole night talking about the system that you should be having. Either you develop or you customize or you tailor made, doesn't matter. But in trading, the three pillars must include your trading system. That we'll be talking about how to use it, how to develop it. Now, trading system sometimes is also called platform for trading. Okay. And if you are going to have a trading system, then obviously the number one thing is, of course, you need to have a methodology. Okay, you need to have a method to trade. And when I say methodology, I really mean what are the principles, what are the practices, and what are the procedure that you're going to use in trading. That's number one. Okay. Some system do not even have procedures, which is very, very sad, because if you don't have procedure, then obviously, uh, you don't you don't have a logical step that you trade. Okay. At the minimum, you must have some procedure, okay, that you incorporate in your trading. Then the second one is, of course, very relevant tonight, because we're going to talk about the technical analysis, the fundamental analysis, and the behavior analysis, which I call BA, that everyone will have to use either one or two, or the combination of that, or that. Okay, right. So that's the reason why some trader are very good in TA, some trader are very good in FA, but the missing point is they are not able to combine either the TA and FA together when they use to trade in the market, for example. Okay, so you can be very good in TA, but you don't apply FA. There's also a missing link, or what I call a gap. Then finally, of course, uh, in your methodology, you got to have a trading strategy. So what strategy are you going to trade? What are your favorite strategy? Or when you look at the market, which strategy is more relevant, more important? So if you don't have a strategy, then what I can say is you don't know how to trade. And then your trading system, which I emphasized just now, in terms of risk management. So if you do not have risk management rules as part of your system, then obviously you are making a big mistake, because as I mentioned just now, risk management is one of the very important pillar in trading. Okay, so a good trading system must have a risk management rules incorporate in the system. And when I say about risk management, I really mean two things. One, do you have risk control incorporated in your system? Risk control can mean that if you're going to put in a trade, what is your potential loss that you can incur? Okay, or when you put in a trade, what is the maximum loss that you can bear? Okay, So you need to control your loss. You need to control your risk in trading. And then you got to incorporate what I call money management rules. Okay. Money management rules, the most important one will be how much are you losing if the trade goes against you if you don't put a stop loss. What are your drawdowns? In other words, for whatever reason, you lost entire series of trading or series of trades. Okay, how many losses that you can incur in a single day or in a week? Okay, that's money management. So you have to be very clear on your money management rules. So to recap, your trading system must have a methodology, the method to trade, and also your risk management rules. But if you don't have risk management, then obviously it's not a good trading system. And most trading system I know do not have risk management rules. So let me give you an idea of what I'm talking about in terms of having a trading system methodology. Let me just talk about trading naked methodology. Okay. Uh, in trading naked methodology, I emphasize on the three P's. The first P is a principle. In trading naked, the principle is keep it simple, Simon. In other words, trading should be as simple as possible. You shouldn't be making trading so complex. You should be making trading as simple as possible because your mind to make very fast decisions should be able to make as quick as possible, and the best way to make a very quick decision is to keep your trading charts, your procedure as simple as possible. Okay, so that's the first principle in my methodology. KISS, keep it simple, Simon. Next, we talk about the practice. In trading naked methodology, practice is always to use price pattern. Okay, why price pattern? Because price is a leading indicator. Price is a king in trading. Okay, which some people call it price action trading. So price action trading basically means you focus on looking at the price movement of the market. Then we talk about procedures. Procedures is very important because you got to understand your setup in trading. And once you have a setup, you need to identify your entry point, your take profit point, and where do you put your stop loss. Okay. To me, the procedure is CEST. Okay. Then finally, of course, we talk about trading strategy. Okay. Now, in terms of trading strategy, I use a combination of FAT, TA, FA, and BA. The technical word is fusion analysis. Okay, so fusion analysis is the combination of technical analysis using in conjunction with fundamental analysis and behavioral analysis. Okay. Now, obviously, fusion analysis is more complex. Fusion analysis involves understanding of the technical, the fundamental, and the behavior. And the most common strategy is obviously trade the trend strategy, which is what I call the TTT strategy. Okay. Then the trade the top and bottoms, or what we call the reversal strategy. It is what I call the TTB strategy. Then you got to trade the cluster strategy. Okay, some people like to call it sideways markets, but I call it the cluster strategy, which is a TTC strategy. And obviously, if you are trading the news, you've got to have a strategy that's able to handle news events, news releases, and that I call it the TTN strategy, trade the news strategy. Okay, so these are very important uh, strategy that most people will apply, but I think that most people just learn how to trade a trend. Right? Okay, most people will learn how to trade a trend, but if you really want to trade the market, then obviously you have to learn more than just trading the trend. Okay, let me talk about a bit about trading strategy. Okay, because trading strategy is a very very important part of trading. So let me just say that trading strategy is defined as a predetermined set of trading rules okay, that a trader develops to guide his or her trading. The key point is, of course, you got to have a predetermined set of rules. Okay, you got to define the predetermined sets of rules. And where do you define your pre, pre, predetermined set of rules? When you set up your trading plan, you need to define the set of rules that you want to trade. The the content of the trading strategy is basically 7 items I listed here. Okay, number one, what are the instruments that you are going to trade? Instrument basically means, are you trading stocks? Are you trading options? Are you trading commodities and things like that? Okay, and within stocks, okay, you might want to trade, for example, technology stocks, and what are technology stocks that you are focusing on. For example, you're trading technology stock, you only want to look at Apple, okay, look at Google and things like that. Okay, time frame. Time frame is extremely important because you need to trade the time frame that you're comfortable to trade. For example, some people like to trade 1 hour, but if 1 hour is not your time frame that you are comfortable to trade, then don't use 1 hour. You should be using a time frame that you think you can trade well. Okay. And of course, time frame relates to your style of trading. Okay, for example, you are a day trader, then obviously you should be looking at the weekly time frame. You should be looking at something like 1 hour, 15 minute, 5 minute. Okay, if you're a day trader, so your time frame relates to your style of trading. Third, you got to have a setup in trading. Okay, If you don't have a setup, then you really don't understand where is the entry point, where's the exit point, and where do you take your profits. And finally, as I said, to make your trading complete, you got to define your money management rules. Okay. So basically, I've listed the 7 items here, which you must have it in your trading strategy. Trading plan, let me say again, is defined as your trading strategy plus your game plan. Okay. I use the word game plan because you got to know how to attack the markets. You can have a strategy, okay? But when you look at the markets, it could be fast moving markets. The pattern of market has changed. Therefore, you need to come up with the way that you're going to attack the market, because you have to select the right strategy to incorporate in the game plan. Okay. Sometimes people call the trading plan as plan the trade, trade the plan. Okay, I mean, I'm just sharing with you some of the terms that traders use. Okay, let's talk about some of the tools to develop a reliable and consistent trading system. Obviously, the topic tonight is technical analysis. Okay, so most trader, as I said, will use technical analysis as a tool to develop their system. Okay, for example, trend trader, very common trend trader, will choose moving average as a technical tool as their trading system. Okay, so most people will use moving average as a technical analysis tools. Very common. Most people will use technical analysis, and they choose technical analysis, they choose moving average, for example. Okay. Some people might use Bollinger Bands because they think Bollinger Band is a good technical analysis tools. Okay, some people might want to use stochastic. Some people might want to use RSI, MACD, MACD, and all that. Okay, right. So these are example of tools in technical analysis that most trader will use. By the way, I don't use all these tools. Okay, I just sharing with you the common tools that most trader use. Okay, I don't use all these tools. Okay, as I mentioned, my trading philosophy is that keep it simple. And to keep it simple, I don't use any technical tools. Next, fundamentals analysis. Okay, in fundamental analysis, there are so many tools that you can select in choosing your fundamental analysis. And I'm going to talk about some of those things tonight. Right, so again, as I said, institutional traders are very strong in fundamental analysis, so they use some of the very important fundamental analysis tools in their trading. So we're going to talk some of the very important one tonight. Last but not least, behavior analysis. FA, sometimes called behavior finance. Okay. So in behavior finance, we look at some of the tools that people use to trade. So with that bit of introduction, let me go into a more detailed discussion of what is technical analysis. As I said, TA is the heart of trading, right? TA is widely used to develop your trading strategy and by default also used in your trading plan, right? So I'm going to spend a bit of time talking about what is TA, right? If you talk to every technical trader, by the way, technical traders means trader who only use technical analysis. That's why they're called technical traders. Sometimes they call themselves system trader. Sometimes they call themselves mechanical trader. It doesn't matter whether you're system, mechanical, or technical trader. All of them use technical analysis. Okay, right. So I'm sharing with you that technical analysis is a very complex, a very detailed area of trading. Okay, I'm listed here. Uh, the 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 10 most important literature in PA. Okay. By the way, I have all that. I've gone through all that. Okay. I understand exactly what everyone is saying about technical analysis. Okay. And as I said, if you ask any trader, they will define TA in their own terms. Okay. Right. What I listed here is not exhaustive. In other words, there are much more literature in PA than this. But here are the more important ones. Okay? Right. So it is a very wide area. There's a lot of literature in PA. Okay? Uh, in fact, you can spend a whole lifetime studying PA. And as I mentioned, if you ask any technical trader, they will have their own favorite definition of what technical analysis. Why? Because they look at technical analysis from their own angle, from their own perspective, from their own experience. Okay, right? So when you talk to somebody, they probably define TA in their own terms. So what exactly is technical analysis? Let's talk about what is a general term or what's a general definition of technical analysis. And I will tell you exactly what I define technical analysis, and you will see the difference. When I conducted technical analysis of financial market many years ago, this is a 3 months program. As I mentioned, it goes into much more detail because it's a very long 3 months program and it's a very thorough program that I teach TA for essentially everybody who trade in the financial markets, whether that person trade the stock market, the commodity market, the futures market, the foreign exchange market, doesn't matter. Everyone will use the the tools or the technique I mentioned here. Okay. But obviously tonight I can't be talking everything. I'll be just sharing with you, okay, what are the more importance of this program. Okay, let's talk about what is technical analysis in general. I like to use one of a very favorite trader by name of Charles Kirkpatrick. Okay. By the way, Charles Kirkpatrick technical analysis is 1,000 over pages. It is very thorough. It describes in fairly details what is technical analysis about. So he defined technical analysis as a study of prices. Okay, very important. In fact, TA is nothing more than study prices in the market. Okay, and when we talk about markets, we're talking about tradable market, freely tradable markets. Okay, we are not talking about market that don't have prices, for example. Okay, we are not going to talk about markets that prices don't move, for example. Okay, now we're talking about active volatile markets, or what Kirkpatrick called freely traded markets, with the intention of making profitable trading or investment decisions. So I like about his definition about TA because it's very simple. It's a study of prices in a market, so that when you use TA, your idea is to make money in the market, okay, or to make trading or investing decision. Another definition of TA that I like talks about is the art of identifying trend changes. Okay, this guy, Mr. Prince, like to use TA to identify trends. Okay, and nothing wrong with that because most technical traders are trend traders. In other words, they trade the trend. Okay, so they want to use TA as a tool to identify trend changes. And when you identify trends, you want to identify trend as an early stage. In other words, you want to catch the trend when it's emerging. You don't catch the trend at the end of the trend, because if you catch the trend at the end of the trend, then trend will reverse. Okay. So his definition of TA is art of identify trend changes at the early stage and to maintain an investment or trading posture until the weights of evidence, very, very important. The weights of the evidence indicates that the trend has reversed. Right? So Martin Prince's definition differ from Kirkpatrick. Okay, Martin Prince, as you know, uh, writes a lot about trading the trend. Okay, right, and of course, his famous book is Trading Analysis Explained. Okay, I like Prince because you are trading the trend, then obviously you got to believe in Martin Prince. So, what is my definition of trading analysis or technical analysis? Okay, my definition, of course, is very simple. TA is a tools or technique to identify and describe past and present stock prices movement and price relationship of the stock market. I use stock market because it's a very common market that most people understand. Okay, but so my definition is very simple. It's a tool or technique to try to analyze the price movement of the market. Okay, with the price action information, trader interpret the potential market behavior and take appropriate action. So the key word is although you can identify price movement, you can identify price relationship, but can you interpret the behavior? The movement of prices, the movement of the price relationship. Okay. Now many people can identify price movement. Many people can identify price relationship, but they do not understand how to interpret the movement. If you don't understand to interpret, then obviously you're going to make wrong decisions, or you're going to take the wrong action. Okay. And I want to emphasize this very, very important point that everybody forgets. The key point is it is never to forecast or predict future market behavior. Let me repeat. It is never to forecast or predict future market behavior. Now, when you look at most of the technical analysis literature out there, everybody talks about trying to forecast or predict market behavior. As you know, trying to predict market behavior is like trying to predict the weather. Now, can you be very accurate in predicting market behavior, same as weather behavior? It's not possible, right? It's not possible to predict the future. Even though you can predict the future, but how accurate can it be? That is the biggest challenge. So in technical analysis, the key is to anticipate the possible price action. Don't forecast, but look at the weights of evidence, look at the price behavior, and our job as trader is to anticipate what is the price action, okay, and take the necessary action. We are not predicting, we are not forecasting, we're just trying to make high probability intelligent decisions. That's all. So it is different from trying to predict. Anticipation is not predicting. So I hope that you understand what I'm trying to say in terms of the way I look at technical analysis, which is very much different from most people. And if you really look technical analysis in a microscope, right, you find that TA is actually a very complex subject. First of all, when I say TA, I really mean the various area, the various the various area in technical analysis. And the first area I want to identify is this thing called candlestick analysis. Okay. Now, to me, as I mentioned, candlestick is the kindergarten of trading. If you don't understand candlestick, then you really fail in kindergarten of trading. And I always encourage people to understand candlestick analysis first as a technical analysis area, then move to charts and charting. Okay, now, because candlestick is a very important tool in charts, and most people will choose candlesticks in their charts rather than a bar chart or line chart, okay, or Haisin Asaki charts or Renko chart or whatever. Okay, right. Candlestick is very important because candlestick has a long history, 140 years of history. So candlestick is well proven and it's used by Japanese when it first started. So it's a long history, it's proven. Okay, it has a lot of very important information that you can make use of as a trader. And after you master charts and charting, then obviously you got to analyze the market. Okay, and market analysis is a very important area in technical analysis. Then obviously the key important area in trading is analyzing the trends. Trend analysis is an important area in technical analysis. Next, we'll talk about price patterns. Okay, to me, price pattern is the key in trying to understand the market, because my definition of technical analysis is to understand about price movement, price behavior. So price pattern is a very important and integral part of technical analysis. Then we talk about technical indicators. Okay, when I say technical indicators, I really mean some mathematical formulas, some mathematical equations, okay, that you develop or apply in trading. And there are many technical indicators that most technical trader will use. Okay, lah. The most common one I can tell you is RSI, MACD, stochastic, Bollinger Band, moving averages. Okay, uh, then there are very sophisticated indicators. Okay, that got to do with very specialized areas. Okay, like linear programming and things like that. Then we have this thing called technical oscillators. Okay, technical oscillator basically means that you try to understand the market moving up and down. Okay, in a sideways market or in a very fixed range. Yeah? Okay, there are so many oscillators that you can choose. Okay, and again, oscillators are mathematical formulas. The more advanced trader will probably use Elliott wave, Fibonacci gang. Okay, and that's a very important area in technical analysis. But obviously, if you are not going to use Elliott wave, Fibonacci, and gang, it doesn't make any difference to you. Okay, but it is an important area in technical analysis. Then we talk about, trading system and strategy. Okay, it is a very important part in technical analysis. Some people like to develop their own system, for example. Some people might want to use a system that is already available in the market, or they want to modify somebody else's trading system and strategy. Then, if you use somebody else's system or you develop your own system, then you must know how to test the system and how to manage the system. So technical trading also involves system testing and management. And you got to find how to integrate technical analysis with, for example, fundamental analysis. Last but not least, there's a behavior aspect in technical analysis. So when it comes to trend analysis, then you need to understand Dow theory. You need to understand what is the efficient markets, what is a random walk of the market. Uh, Obviously, when it comes to trend analysis, you need to understand, okay, what is a Dow theory talking about as compared to efficient markets. Okay, because when you're trading trends, you need to understand whether you're going to apply Dow theory or you're going to apply efficient market. So as you can see from my charts here, TA is a very wide area, right? And it requires a lot of knowledge and learning as well. Okay. So what I'm trying to point out to you is that you really want to master technical analysis, then you got to start off with candlestick analysis first, then learn about market analysis, then progress to trend analysis and so on. Okay. It might take years to master all the topics, but most people just learn one or two topics and say, good enough. I understand technical analysis. So be it. I mean, right. But my complete technical analysis program is really a 3 month program. So that goes to show how thorough, okay, that technical analysis learning can be. Yeah, okay now. But obviously, I don't expect. So when I teach this program in a university, it's really a 1 semester program. Okay, so much about technical analysis. Let's talk about fundamental analysis. Again, I conduct this program, fundamental analysis of financial markets. Again, it's 3 months long. Okay, as you can see, there's a lot of literature in fundamental analysis. Okay, if you are trading stock market, then obviously you know how you got to value, you got to learn how to value your stocks. Okay, and then there are very advanced technical analysis tools like, okay, you need to understand about economics. Okay, you need to understand about economic indicators. Okay, as part of fundamental analysis. So there's a lot, like TA, there's a lot of literature, okay, around, and obviously it takes a long time to master all that. But by the way, these are my favorite TA literature. The classic technical fundamental analysis is this guy called Benjamin Graham. In fact, Warren Buffett, the greatest fundamental investor, actually learned from Benjamin Graham. Okay, and Benjamin Graham famous literature is called the Intelligent Investor. Okay, I'm not trying to tell you that you should read this book, but you know what I'm trying to say is this is a classic fundamental analysis literature that most people will probably read it or probably know about it. Okay, but to me that's a classic. Again, there are many definitions of fundamental analysis, right? If you ask any traders who use fundamental, they'll say, hey, my definition of fundamental analysis is this. You ask another trader, they say, oh, my definition is this. So what is really fundamental analysis about? First, I believe fundamental analysis is also a tools or technique that you can use to determine, in this case, the intrinsic value of a security. Okay, the true the really key word is intrinsic value. Okay, so for example, you want to apply fundamental analysis in the stock market, then obviously if you choose Apple, for example, Apple computer, Apple company, do you really know what's the intrinsic value of Apple company, right? If you don't understand the intrinsic value of Apple company, then you don't know whether that the current price is higher than the intrinsic value or lower than the intrinsic value. Okay, so that's a very common uh, explanation of why intrinsic value is so important. If you are trading gold, okay, do you know what's the intrinsic value of gold? Okay, let's say today the gold price is 1780, right? And if you calculate the intrinsic value is $2,000, right? So 1780 current price is lower than your intrinsic value, which means to say gold is undervalued, right? So I'm just trying to tell you or illustrate that fundamental analysis got to do with value of the security. And what are the factors that determine the intrinsic value? There's so many. Historical project earnings and dividends in the case of stocks, management capabilities, financial strength of the company, markets. You got to analyze the markets. For example, you're trading Bitcoin, then you got to understand what is Bitcoin market or the cryptocurrency market. What are the industry growth? What are the main products? For example, you're going to interested in technology stock, for example. So you need to understand about the technology markets, whether the technology market is expanding or contracting, whether it's a sunset industry or sunrise industry. Okay, because that got to do with the value. If you're going to buy a product that's sunset, then unlikely there'll be demand, for example. Okay, so the classic literature on the equity market is based on Benjamin Graham, sometimes known as value in the investing. Okay, I do not want to spend too much time going through the details, but if you really want to understand about fundamentals, right, then there's a lot of the methodology involved. Okay, for example, okay, if you're a stock investor, you got to know how to value a stocks. It can be a top-down approach, a bottom-up approach. Okay, and there are what I recommend a three-step process of market evaluation, industry analysis, stock picking process. Top-down approach, understand the macroeconomy, understand the financial markets, then zoom down to the industry and the company. That's a top-down approach. Most fundamental analysts or fundamental trader or investor, they'll use this approach, top-down. Then obviously there's a bottom-up approach. Company go to industry, go into the market and the macroeconomy. Market evaluation, okay. What are the things I look for in market evaluation? Economic performance. Okay, very important. Okay, for example, if you are going to buy a stocks in Hong Kong, then obviously you need to know the performance of the economy of Hong Kong. You're going to buy Singapore stocks. You need to understand the economy of Singapore. Okay, whether Singapore economy is growing, expanding, or contracting, whether there's an inflation, right, or whether there's a recession and things like that. So economic performance extremely important. Political stability, okay, it's a very important factor in market evaluation. Then we talk about social factors, okay. Then the market valuation, whether the market valuation is 16 times PE, 20 times PE, and things like that, okay. So all that are very important factor you need to consider when you evaluate markets. In terms of the industry, you need to understand about the life cycle, okay, of the industry, right? If you're going to invest, for example, okay, uh, in a sunset industry, for example, then you know that this industry is not going to give you any potential growth. Financial wise, you can look at revenue, cost, and profits. In terms of stock picking, these are basically financial tools. Okay, now, I like to use DuPont analysis in terms of financials, dividend, discount models, price PE ratios, net tangible assets, cash flows. Okay, so when you try to pick a stock to buy or sell, then these are the very important financials that you need to consider. Okay, as I said, you need to understand all that, and going to take couple at least 3 months to you know to really go through the whole lot. I just want to share with you quickly what are the three stages of fundamental analysis. First, we talk about the economic and political analysis, right? Go into detail the interest rates, inflation, the growth prospect, the monetary policy of a country, the fiscal policy, business cycle, politics, and government policy. All these are very detailed areas that you need to analyze on the economic and politics. Then the industry and the company. Okay. So fundamental analysis is a very detailed methodology that you got to go through the three steps to really derive at the intrinsic value. Okay, if you look at equities, okay, the common one is of course what is the earning of the equity, what are the potentials, whether the stock is undervalued or overvalued. We talk about value investing. You compare intrinsic value with current market prices. You buy stocks whose intrinsic value are below market price, or what we call misplaced price. So, in summary, you really want to master fundamental analysis. You got to start off with security analysis, go to the economic analysis, financial analysis, and so on. Okay, it may take you years to master. Some people just learn one or two topics as usual, but my program is 3 months, as I said, right? So it takes that long to really, understand a bit about fundamental analysis. That's all. Okay, let me spend 1 minute, just 1 minute, talking about behavioral analysis. It's got to do with the psychological traits of you as a trader, and how these psychological traits affect the manner in which you act as investor or trader. Okay, uh, I like about this behavior analysis because it tells you a lot about yourself. What are the behavior biases that you have? Okay, okay. Some people call it fixed mindset. Okay, some people call it your belief system, whatever. Okay. Now, if you have a belief system that is very fixed, cannot change, then it's very, very hard, to make good decisions. Okay. And then on top of that, you don't understand about yourself. Okay, personality traits. Okay. So when I look at personality traits, I really look at neuroticism, the fear, the greed, and the anger. Extraversion, whether you're extrovert or introvert. Now, these are very important factors that affects you as a trader or investor. Okay, and you are really, really neurotic. Okay, and you are really neurotic in your personality. Then you got to correct. The most serious one will be your anger. Okay, uh, I just want to touch on why the behavior is so important. Okay, because at the end of the day, you must able to control your emotions, because emotions were going to sabotage your investing or trading. Believe me, if you are not able to control your emotions, then you really, really cannot trade well. That's the bottom line. Right? You got to control your emotions, and especially you are very highly neurotic person, you need to know how to control your emotion well. Okay. Uh, so when I conduct personality tests, these are the things I look for. Okay. What are your dimensions? Okay, in your personality. What are your tendencies? Okay, what are your patterns of your thoughts? As you know, your thoughts will generate your feeling. If you have a good thought, you generate good feeling. You got a bad thought, you generate bad feeling or negative feeling. Okay? And when you got negative feeling, you will take what we call pessimistic action, which is bad. Okay? Uh, so as I mentioned, two very important factors in the individual's personality: neuroticism and extroversion. Okay. Okay, as I promise you, I'm not going to talk in detail about behavior. Okay, the key points is obviously got to understand about behavior, because if you are not able to control your behavior, especially your emotions, then it really sabotage your trading or investing. So let me just summarize, what I talk about in terms of fundamental and technical. Okay. First of all, what are the differences? Okay, now. Okay. I will quickly go through all the differences. Fundamentals got to do with analyzing security. Technical got to do with the tools or method to analyze the price. Fundamental is basically used for long term. Technical is basically used for short term. Okay. Objective of fundamental is already to understand about the intrinsic value. The purpose of technical analysis is to understand what is the right time to enter the market or to buy the security. Very important. Okay. So fundamental has to supplement with technical. Okay. Right. So there is a combination between fundamental and technical. Fundamental give you the context, okay, of the security. But when you want to enter the market and find out what's the right price to buy or sell, then you got to use technical. And that is very important because you need to combine fundamental with technical. And then, of course, you make decisions based on fundamental. You got to understand about the economics, understand about politics, understand about the 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 valuation. But in terms of technical, then you need to understand about your analysis of the market, the price movement, and things like that. Okay. Uh Fundamental focus on the past and the present. Technical only focus about the past. Fundamental looks at economics report. Fundamental looks at events, look at industry statistics. Technical looks at charts. Okay, charts is a main analysis tool that you use. Okay. Uh, then obviously the key thing is, of course, most investor will use fundamentals. Most trader will use technical. Okay, now having compared that, let me just spend a bit of time, talking about what are the technical tools or tactics that I use. And I won't be taking very long because, uh, you know, by 10 o'clock, uh, you know, the US market already open. Okay, and Thomas would like to, show you how to trade the markets when the US market started opening at 9:30. Now it's 10 o'clock. Okay. Uh, so when you try to use technical tools and tactics, the thing you need to focus on is what is the style of trading, what sort of trader you are, then what time frame you're going to use. Are you a technical trader or mechanical trader or price action trader? Because you are a technical trader, then you got to use what I call oscillators, indicators. If you're a price action trader, you don't need to use technical indicators or oscillators. What is your level of know-how, your skill level or experience? Okay, as I mentioned, there's a lot of tools in technical that you can use, right? So if you don't have the knowledge, then don't use those tools. I want to share with you how I use TA and FA in trading. Okay, I use a combination of FA, TA, and BA. Technically, it's called fusion analysis. So fusion analysis is basically using the combination of fundamental, technical, and behavior. I use price action trading based on trading naked methodology. I use TA in all markets, stocks, foreign exchange, futures. I use all time frames. Okay, based on MTF is multiple time frames. Okay, and the two literature that explain all that are technical, are trading naked and price driven trading. Now, just to illustrate what I mean when I say I'm a price action trader. Okay, let's look at Nasdaq. Okay, now let's look at Nasdaq. Okay, now as you can see, Nasdaq markets. Okay, Nasdaq market is downtrending. Okay, now as you can see, the market is down. Okay, this is a downtrending market. Okay, why is a downtrending market? As you can see from here, okay, you can see from here, these two channel here, right? These two channel, okay, right? So using a channel would tell me that this is a downtrending markets, okay? So although it's a downtrending market, it's a downtrend, okay, but at a certain point here, so it's a downtrending markets. Now this is what I call downtrend, but with a reversal rally. Okay now. Okay, right. So it doesn't mean that the trend is down, you short all the way, right? Okay, because market don't behave like that. Okay, right. As you can see, that the market went all the way down. Okay now. Then there is what you call, you know, a pullback, and then market went down, pullback, went down, pullback. Okay now. Okay, then finally when it hits the upper channel, you'll go down again. Okay, right. So I'm just sharing with you that okay that you don't have to you don't have to make using PA very complex. Okay, right. That's what I'm trying to say. Okay, so as you can see, I only use the channel, the two channel, and basically the trend lines. You know, not you know, that's all I need. To understand the market. Okay, my philosophy is let's keep your chart as simple as possible. Right. Okay. Okay, let's look at another market, the gold market, right? Okay. So as you can see, the gold market is also a downtrending market. Okay, so by drawing the trend line, okay, and obviously I also use the channel. So I understand that okay, the market move like that. Okay, so gold now is trying to okay hit the 1800 level before you retrace down. Okay, so as you can see, you don't really need a very sophisticated technical analysis tools to able to trade in any markets. Okay, I mean, you get for me if I look at any markets, I try to look at it uh, from you know a trending angle. Okay, okay. Let me try to summarize what I've been saying. For for the past 1.5 hours. Mechanical traders, system traders, or technical traders only use TA tools and tactics. Discretionary trader, price action trader use a combination of FA, TA, and BA. They are better traders like hedge fund traders. Okay, mechanical traders are what we call the fixed rule traders. There's no perfect system, right? There's no such thing as a perfect system. There's no such thing as a perfect tools or tactics. The key thing is to understand yourself, how you want to trade the markets, and learn to trade the live markets. What successful trading is all about is nothing new. Okay, trading is a probability game. There's no certainty. Losses are expected. Okay, there is no holy grail in trading. 80 to 90% of retail traders lose money. That's a fact. You cannot, right? Trading is not get rich scheme. Please remember. Okay, when you trade, you have to have realistic expectations. Okay. On the other hand, the majority of people are unrealistic in their expectation. Okay. For example, most cryptocurrency traders, they are not realistic at all. Okay. They expect to use small capital and make big money. Right. And it's not realistic at all because the market doesn't work like that. Successful trading is a marathon race. You need long preparation, hard work, practice, and honest guidance. Honest guidance is very important. People telling you the truth, okay, and not some hype, okay, or fantasies. There are only two group of traders, okay, now just believe me. One that consistently win, another consistently lose. Okay, so the winner will take from the loser. So which group do you belong? Why do you belong to that group is more important. Okay, I've exceeded my allocated time. But just to complete what I'm going to say, if you really need help in trading or investing, then I think the right person is to contact Thomas Saw at these numbers. Okay? Right. You can either go into his Facebook, his WhatsApp, or simply giving an email. Okay?